The gaming market is reacting sharply to the latest financial forecasts from Nintendo, as its shares slumped nearly 5% in Kyoto. This volatility follows a conservative outlook that has left investors and tech enthusiasts on edge about the future. The company is navigating a difficult transition period as the legendary Switch console enters its 8th year on the market. Navigating this twilight phase while managing new hardware expectations is proving to be a dual challenge for the brand. Nintendo projects an operating profit of 360 billion yen, which is approximately $2.3 billion for the current fiscal year. While this figure is massive, it represents a sharp 20% year-on-year decline for the gaming titan. Analysts had expected much higher targets, with estimates hovering around the 400 billion yen mark before this update. This shortfall compared to market expectations is one of the primary drivers behind the recent share price drop. Hardware sales are also expected to see a significant deceleration over the coming months. Nintendo anticipates selling 12.5 million Switch units this year, which is a sharp decrease from the 15.7 million units sold previously. The market is also spooked by a lack of heavy-hitter software titles confirmed for the immediate holiday season. With no major hardware release to drive momentum, the company is leaning heavily on its aging existing library. Adding to the tension is the implementation of a $10 price hike on major first-party titles. Nintendo has officially joined rivals Sony and Microsoft by pushing its flagship games to the new $70 price threshold. This price creep is largely a result of rising development costs and global inflationary pressures on the semiconductor supply chain. Producing high-fidelity assets for modern gamers requires significantly more investment than in previous generations. Experts at J.P. Morgan suggest that this higher software cost might lead to a shortfall in consumer appetite. The aging Switch hardware struggles to justify a premium cost when compared to more powerful next-gen competitors. The main focus for everyone remains the successor to the Switch, which is currently creating a valuation vacuum. Investors are wary of a stagnant transition period where software sales cannot carry the weight of declining hardware. Nintendo President Shuntaro Furukawa confirmed that an announcement regarding the next-gen hardware will be made within this fiscal year. This news provides a glimmer of hope for a market hungry for real innovation. However, the lack of a concrete launch date for 2026 continues to fuel uncertainty among the financial community. Without a clear timeline, the market remains cautious about the short-term growth potential for the company. This is a pivotal moment for the house that Mario built, as it attempts a soft landing for its most successful hybrid. Success depends on maintaining consumer interest while preparing the field for a high-stakes sequel. All eyes are now on the second half of the fiscal year to see if the Switch 2 can restore momentum. The global tech community is waiting to see if Nintendo can once again redefine the gaming experience. Stay tuned for more and subscribe to never miss a tech beat.